Greetings, guys. Hope everyone's okay. Hope you're having a good evening. Yeah, welcome to today's session. Yeah. So let me just give a bit or 2 to 3 minutes just for everyone to join in. I'm just updating everyone in the group that yeah, each session has started. So yeah, just a few minutes, then yeah, we can just begin everything. Okay. Yeah, I think we can continue with the session. I think the others will just join in as we continue with the session. Just gonna, as you can see, the screen's already blacked out here. Just gonna make same control. Okay. Okay, so basically we said, guys, today we're covering fundamentals today. Yeah. Fundamentals. Okay, a quick question, guys, before I even continue with this session. Is there anyone who's new here so I know what to start with or even go into the fundamental strategy? If you're new, please type there on the chat box because I've muted everyone from, in fact, hosting from speaking. So you can just type there on the chat box if you're new and you haven't been part of our sessions. If then we'll see so that I know what to teach. Okay. Let me just start off because I think there's okay, someone is new. Okay. Just gonna start it off with my risk management. Please make sure you have a book and your paper, book or paper or a pen. Just make sure you're noting this down or writing this down. So you can also back test this. First things first, you need to know risk management. Risk management. This is the first thing you need to learn. Trading. Yeah, risk management is your first thing. Another thing that you need to know about risk management. Risk management is a personal thing for everyone. So everyone has a different capacity when it comes to imali or money. People do different jobs. You'll get paid differently. So risk management is purely a personal thing. I always say, do not deposit any amount you are afraid to lose, or do not deposit any amount that you can't afford to lose. So any amounts that you deposit, guys, just know that that amount you've already told yourself, oh, it's okay, fine, this amount is going into a Forex, and that amount is no longer mine until I make profit out of that account or amounts that you've just deposited. So yeah, that's just gonna help your psychology, just to have you make peace with whatever you're gonna be depositing. Just tell yourself, whatever I've deposited here, it's no more mine. So I'm only depositing this amount, and this is the amounts that I'm capable or comfortable losing. Okay, so for a start, I always usually say people can just start off with about 300 rands. 300 rands is a good amount to start with. Remember, for any strategy that you're trading, you need to start off small first before you can scale in. Start off small. You deposit with 300, make sure you deposit with a broker that has 100% bonus or even more. That's also fine. 100% bonus broker. So basically, I did send you guys a link in the in the group so that you guys can just know which broker I'm also using. So basically, broker provides you 100%. So if depositing 300, broker gives you 100% of another 300, meaning equity jumps to 600. Your equity is 600. So basically, you're a person who deposited small amounts, and with 300, which is a small amount, which your equity, you got a bonus. Your equity is now sitting at 600. So basically, all your targets are now based on this equity. So before you open a trade, or when you open a trade, just make sure, Gote, your targets are based on your equity. So for example, yeah, we always target. So basically, we target. Interesting. Okay, we're targeting 50%. Target 50% or ugh, see, or 60%. 60%. Oh, man, no, sorry about that, guys. I don't know what's with all these mistakes today. Okay, yeah, perfect. So on your equity, which is 600, these are your targets. Once you get to this target, guys, you can close that trade. It's okay to close the trade or protect half of your profits. 50% to 100% out of your equity. So meaning of 50% of your equity, which is your equity of 600. So 50% of that should be 300, which if you make it 300, you've already doubled your trading account, your initial deposit, which is good. You've already doubled it. When you make 100% of the equity, which means you made another 600, means you've doubled, tripled your deposit, which is still good. So 50 to 200% of your equity, that's what we always target. So that's risk management skill. That's a skill. In fact, it's a skill of using your risk management to benefit you. Okay. And I always advise every time when you open a trade, always start off with a small volume, just to test the direction. And then as the trade is going to your direction, make sure you put in a lot of trades. Myself, I like to go full margin. Okay, guys, I hope you understood that. Whoa, look at that. Did you guys see signal? Can you just comment there on the chat box if you guys got the signal for buy on EGBP? Just comment there on the chat section that you're in and you're winning. If you took the signal, you should be winning. Just make sure you're commenting there that you are winning. I'm in crazy profits currently right now. If you took the signal, all of you guys should be winning. I wanna see yours. I wanna see yours, guys. Comments there on the chat section. If you took the signal that I just gave, you guys should be winning. We are winning hard. Okay, I see there's a comment there saying you guys are winning hard, winning. That is good. We're already winning, guys. We're winning. Let's continue pushing. We've been winning all day, every day Let's continue. Okay, let's continue with class, guys. At least you're learning and making money at the same time. See you guys, comments there. I was making a video here. Okay, let's continue. Someone's saying I'm holding this one till tomorrow. We'll see. We'll see how the market plays out. We'll see. I'm also gonna hold this one until it reaches the take profit. Barely I have nothing to lose on this one. But as the market goes to half, at least anyway here, I'm gonna be protecting half of my profits at least. Okay, let's continue with the session, guys. So yeah. So that was it for risk management. Then right now we go to fundamental strategy. Fundamental strategy today, there was fundamentals. I think I sent my fundamentals to the group. There's usually strategies that how I approach markets when it's based on my fundamentals. There's a lot of strategies that you can approach, but I've found that the most profitable ones are these ones that I'm going to show you guys right now. It's basically these two. It's two of them. Like it's two type of trading strategies for fundamentals. You can note it down. I'm just gonna remove this thing. Okay. There's two types of ways I trade fundamentals now. Two types of skills. Two types of skills to trade events. You guys are writing this down. There's two types of skills to trade events. These ones that I'm going to show you now, these are the most profitable ones. I'm going to make an example first here, then also show you all on a live chart. Okay, two types of skills, trade events, which is the first one is going to be your pending orders, guys. Someone's there. I should touch on the strategy that we just used now. I just used the signal. That's a lifetime strategy, guys. Don't worry. This is the only strategy that you can kill the market on a day-to-day basis with. I'm going to touch on it, but I also want to touch on the fundamental strategy as well. Because remember, my fundamentals can either mess up our trades or they can boost our trades as well. But I just need to give you guys a strategy on how I also approach my fundamentals as well. Okay. Which is the first strategy. It also worked wonders today. If you look at it, I think it was the the Euro CPI that happened. I think at 2 exactly. The market just shot straight up. So the first strategy could have worked for you as well. The first skill, which is your pending orders. Your pending order skill. How do we approach the pending order skill? Let me just show you guys on the chart. I think it's much easier on the chart. Okay. Pending order skill. We focus on, here's a candlestick, this one. Either one, whether it's this big one or that's this one. Okay. Look at what happened here. So basically, before this market shot straight up, I can even use an example here. Whenever E event is about to happen, we will get big candlesticks, these engulfing candlesticks, we'll get them. So what you do is, before, when there's 1 minute or 2 minutes left, I always go for 1 minute. 1 minute before the fundamentals, guys. On your last, when you're looking at your last candlestick, we're doing this on a 1 minute time frame. Make sure what you're placing your sell stops below before these big events happen. Before this big candlestick happens, we're focusing on this one. We're placing on my sell stops right below it, probably 5 pips away from it. 5 pips to 6 pips away from your last low, which is your opening of the candle on a 1 minute time frame, y'all guys. Then you also just slightly place pending order 5 pips away from that current candlestick's high. And then you just wait for the event to play out. Once the event happens, probably boom, negative for E pound. straight, it activates your sell orders in market. Market activates your sell orders, in market shoots straight down. We always want to make sure that we have a take profit as close as possible because we want to avoid spikes. Have a TP as close as possible. Damn, our trade is winning big time. Okay, but yeah, and then if your market had spiked up, then it was going to activate your buy orders, and then the take profit must be close to avoid spikes. We avoid spikes by having a close take profit. And then on these pending orders, we are putting big volumes, big volumes on your pending orders. So that the market takes you in, it takes you out quickly. You're out. You already made your daily target. You can do this by back testing it. On even your strategy test on your MT4, you can practice this pending order strategy a lot. And then let's look for this one, this made up buy. Same thing. Could have placed sell orders here, buy orders right on top. Buy orders right on top. As you can see, candlestick closed inside. This small candlestick, it closed inside. That was the high of that candle, low of that candle. E-market in the yani, positive. Market gave us a positive reaction for a pound. And the market did what? It spiked up. It activated your buy orders. Same thing. Always make sure you have your take profits really close. Market takes you in, it takes you out. You're avoiding spikes. It takes you in, it takes you out. And then, okay, after that big movement, e-market, you're gonna make sure that it gives you a signal to trade. Let me see if I open it 30 minutes or 15. Perfect. Look at this. Market broke out, it went straight, we're out, and then I always tell you guys, we'll go to after a fundamental. This is where the second strategy comes in. Is the after effect. That's the second strategy. Second way to trade. Second way to trade is called the after effect. You guys are still noting this down and following. Second way to trade is the after effect. Look at exactly when your market was done. Give always after a fundamental, give the market, I said, about 10 to 20 minutes to rest or to slow down. Okay, I see there's a question there. How do I calculate my volume for pending orders? You don't really calculating volume. What you can do is I usually myself I will place my pending orders of small volumes, and then I just make a lot of them pending orders. Like I'll place maybe about 0.1 5 times. It will activate the ones that it activates, and the ones that it doesn't activate, maybe it will not take them in. But I place very small volumes, but I use multiple trades because I can't just jump straight in with a big volume because I might not know whether it will take that trade based on my trading accounts, whether it's big or small. The fundamental skill, guys, it's not that difficult. It's just I'm pending orders before you market. Replacing buy pending orders and sell pending orders before you market actually releases the stats for events. The market it released my positive news for pounding. The market shot straight up, as we can see. Then the second way to trade is the after effect. After a market is done moving, probably 10 to 20 minutes after a market. Yes, I use 1 minute time frame only. After a market is done moving, give the market 10 to 20 minutes. Look at the volatility of the market. I always tell you guys this, at the end of that movement, e-market should give you a pattern. That is the after effect. If your market was shooting straight up, it should give you a pattern. Look at this one. Gave us a double top pattern. Here's your first top, here's the second top. It's a double top. It's a double top. A double top indicates what, guys? It indicates a sell. I've been preaching the same thing over and over and over again. You guys, those who my sessions they know. I always tell you guys, with the after effects is when by e movement is done, and then we're just looking for a reversal pattern. At the top, because the market was positive, we got a bullish move, and then at the top, we're looking for a reversal pattern. Here it is, a double top. Markets did what? After a double top, it shot straight down. Look at here. The market was negative. It went straight down. Look at what we got before the market moved straight up. We got a triple bottom. I can even call this a double bottom, but look at this. We got a pattern. It's a small Nyana inverse head and shoulders as well. There will always be a pattern after a movement of my fundamentals. There will be a reversal pattern always. The first strategy, pending orders, market takes you in, takes you out. At the end of the movement, look for a reversal pattern. Reversal pattern will indicate to you the next movement of the way market is going. Because the market, if it gives us a big bearish candlestick moving down, just know we're going to cover that movement as well. So your job is to look for a reversal pattern, just like how it did right now. So basically these two ways, pending orders and the after effects. So the after effects, just make a note there, look for a reversal pattern after a volatility has slowed down. That's the most important part. Look for reversal pattern. The end of the movement. I hope this is making sense. Remember guys, the information that I give you guys, you have to look at it, study it, and make sure you just put in the work. You can't just catch everything in one day. It's not magic. It takes practice to get good at this. So as we said, pending orders, your market breaks out, it takes you in, it takes you out, and then you look for reversal patterns, which is the second way. It's your after effects. Market did this twice today. Okay, guys, understood. I've been telling you about. You can just type there on the chat box. We can continue, so I can just jump straight to the other strategy, which is, I think it's the strategy that's a lifetime. The AB is equal to CD strategy. That's a strategy that wins one way. Or if you guys are saying, it's enough for today, that's also fine. You can just catch the session on another on another class. Okay, okay. So good news, guys, is I was able to get the recordings to my email. Now, what I need to do is just share the recordings just for those who need to listen to this thing one way until they master it. It's just that I was trying to make it to do it a bit easier to just send it in the group and one time to send it in the group. I think the only way out of this is just sending it to you guys via the email. Okay. I think you guys are good with this one. Let's move on. Even though we are left with a few minutes now, but I think I can cover this. Okay, guys, market. The second strategy is called AP is equal to CD. Please make sure you note this down. AP is equal to CD. AP equals CD. You can call it whatever you want to call it, a pattern, whatever. It's just a continuation pattern. Continuation pattern. I'm going to start off with the bullish pattern. You guys, we are left with 9 minutes. I think most of the things that you need to know, I can just cover it on the next session. Okay, guys, on the next session, I'm just gonna straight to the AP is equal to CD1, and then I'm gonna give you guys about 20 to 30 minutes of the question and answer session. I need you guys to just let me know how far are you guys and what do you still struggle with in trading? What do I need to answer? And then yeah, we'll just have a Q&A session. Yeah, you guys can question and I'll answer. Question and answer. I think that's going to be very informative and it's going to help you guys a lot. But just make sure, in terms of trading, guys, focus on the AP is equal to CD strategy and the fundamental strategy that I just taught you guys. Make sure you focus on what I teach you guys. Do not try to confuse yourselves with any other thing aside from what I am teaching. As you can see that these patterns that I'm also showing you guys, all these signals that I've been giving you guys have been profitable. One way, we're making money. If you're not taking out the signals with us, you're missing out. Look at this thing, it's flying up. I'm sure I'm already almost close to my 50% because I don't I don't have time to waste. I really opened these trades. Exactly. Yes. I was just looking at my phone. Okay, let's continue. I'm gonna start off with the bullish pattern. It's a continuation pattern, guys. It's a continuation pattern. Okay. For some of you guys, because the market has already moved up, you can just take a stop loss and move it to break even. So it could be a risk-free trade. You can sleep peacefully. You can already afford to have a risk-free trade right now. The market has moved. Exactly. You can just have a risk-free trade by placing stop loss circle. Place a stop loss just slightly above your entry points or at your entry points just for this to be a risk-free trade. Because this is the market. The market, sometimes anything can happen, guys. Hey, the market is pushing up. We're making good money. Okay, I'm gonna start off with the bullish APC pattern. So in market, you guys know how to see an uptrend and a downtrend. We're using this on 1 hour time frame. 1 hour time frame is the best time frame because we're day trading. 1 hour time frame, we're day trading on this one. We look at 1 hour time frame. You have to find out where's your low, your previous low, guys. Previous low, your visible previous low. Placing your fib on these lows and highs is going to determine whether you enter early or late. So it's very important that you know how to place your fib. Okay, first things first, identify your low point. Remember, if you know the basics of the forex trading, it says uptrend, you should spot my higher highs and higher lows. That's the basics. Those basics, if you do not know them, go to YouTube. They're very free on YouTube. They'll show you my higher highs and higher lows. And then you come back here, I teach you how to place a fib, and then we trade. Okay, and the next thing, you identify your high. How do you identify a high? It's you e-market only shows you a high point only once e-market starts turning. Then you can confirm that this is a high point. Movement market from this low to that high as the market is retracing. So basically lana below, you can note this down. At your low point, it's called your A point. Also remember, guys, this is vice versa for the selling. Okay, so your low point is your A point. Your high point is your B point. Remember, we said your AB is equal to CD. So your A is at your low with bullish move. Your B is at your high. So B basically is your start of your retracement or E pullback. And then once you get this, how do you know where E market is gonna go? How do you know where E market is gonna go to create your C point? You take your Fib tool. Take your Fibonacci retracement tool, which you can see it there. It's also on your phones as well. You place it from your low, drag it straight up to your high. So you place it from your low, you drag it straight up to your high, and then you wait for your market to retrace to an area that there's an area called a fib zone area, which is your 50 and your 60. Okay, that 50 and 60 area, it's whereby your market should go down to give you your C point. Hope you guys are following this. So a C point basically is your entry for buy. That is your C point. Sometimes the SC market does come a bit slowly, comes a bit down, goes slowly below it, but it's still a valid area for buy. And then how do we get ED points? Remember, OAB, this movement, AB is equal to CD. AB is equal to CD. So this movement of A and B, that movement, you take its same measurements, place it on your entry point. And you see that same movement in market started moving by on your A to B. The same movement in market should move by as well, going from C, your entry point, to D. So we have just now identified your D point, which is your take profit. D point is your take profit. So basically, market moves up, it starts retracing. You take your fib tool, you throw it from your low to your high. You'll get your fib zone area, which is a 15 or 60, which is your C point. That's your entry point. Go buy. Market shoots straight up to D points. With D points, how did we get our D points? Is we took measurements from A to B, we placed it on our entry. Should give us the equals to of C and D. Right, we take profit. You have to have the patience to be able to hold your trade for this one as well. As you can see, even our trades that we took right now, as the class started, J signal was given for us to buy, and we're in profits right now. We're in crazy profits. The market is still pushing up. I'm about to also protect my profits. Because I used a big volume, so I'm about to protect my profits. And then I'll have a peaceful night knowing with my profits protected. Okay. This goes vice versa, guys, for selling. Let me just quickly show you the pattern for selling for bearish movement. The bearish movement, the market has to go straight down. Your A point now goes above. And imagine, guys, this strategy, we've been using it one way and we've been winning a lot. If you have been trading with us, have been taking the signals and or using the strategy, you should know. And once again, thank you to everyone who's been sending me screenshots of you guys taking trades and showing me that you guys are actually putting in the work. Really appreciate that. There's a lot of you guys that are already winning with the strategy. It's very inspiring to see you guys winning a lot. So the strategy, I like to use it a lot on currency pairs, guys. Currency pairs. On indices it does work, but sometimes my indices have their own crazy movements. So I wouldn't really advise it on other pairs. For events, guys, I like to focus on the pending order strategies. For events, I do like to focus on the pending order strategies for my events because they work a lot. But we'll dive deep into those questions and answer session on the next session that we have. Let me just quickly finish wrapping up the strategy. Okay, so for selling, guys, if a tool, you drag it from your high to your low point, which should give you your C points for sell. As the market is retracing, or pulling back, you got your C point, and then that measurement from A to B is the same from your C to D. That is why it's called AP is equal to CT. This is just a continuation pattern. So you can call it whatever you want to call it, but it's a continuation pattern. So that's your TP, take profits, selling.